Welcome back to the Building Wealth podcast and another episode of Market Commentary. Today, we're focusing on the UK, where a wave of economic announcements, energy reforms, and innovation investments are reshaping the landscape in real time. Let's start with the big one, the recently announced 2025 spending review. Chancellor Reeves has laid out one of the most ambitious economic blueprints in decades, allocating over £2 trillion through 2029. Key areas getting the spotlight include over 85 bills for science and tech research, a multi-billion investment into green energy, and a significant push into nuclear power, most notably a £14.2 billion commitment to the Sizewell C nuclear project. This isn't just government spending for spending's sake. It's a strategic repositioning of the UK economy. Think long-term energy security, low-carbon industrial transformation, and high-value innovation as the new economic engine. Rolls-Royce is already tapping into the momentum with funding secured for small modular reactors, an entirely new generation of nuclear energy. Alongside this, the government has passed the Great British Energy Act, formally launching a public energy investment body. Its mission: accelerate investment into renewables, green hydrogen, and modern grid infrastructure. Just last week, Iberdrola was granted a £600 million loan to expand transmission capacity from Scotland's offshore wind to England, an essential piece in making clean energy scalable and reliable. But even with all this forward motion, the UK's industrial sector still faces a major headwind: energy costs. Industrial electricity prices remain the highest in the developed world, more than double those in the EU and nearly 4 times US levels. That's a competitiveness risk the government can't ignore. A proposed £1 billion annual subsidy package is now under review, aimed at stabilizing prices and supporting manufacturing and data-heavy industries from steel to semiconductors. On the market side, these announcements are having ripple effects. Gilt markets are watching borrowing levels closely. Some analysts are raising concerns about long-term debt, especially with growth forecasts still modest. But others see opportunity. Energy firms, infrastructure contractors, and tech research hubs are already attracting increased investor attention. From a portfolio perspective, this is a good moment to consider exposure to UK-listed companies in clean energy, industrial innovation, and infrastructure development. It's also a time to watch how monetary policy will interact with this fiscal expansion. Inflation in the UK ticked up to 3.5% in April, keeping pressure on the Bank of England to delay any significant rate cuts. So, what does all this mean for everyday investors and businesses? It means the UK is making a play, not just to catch up, but to lead in energy transition, digital infrastructure, and strategic manufacturing. And while there are still hurdles ahead, especially around execution and global competitiveness, this direction sets a clear tone. Innovation, resilience, and national investment are back in fashion. Thanks for tuning in to the Building Wealth podcast. Keep your eye on the energy story, the budget trajectory, and the companies building the future.